Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome back. Let's take a look again on the gold market. Well, today fundamental analysis shows interesting picture. The recent data and analysis opinion tells that reaction that we saw to the downside, especially on this week, is dropping, you can see after the Fed minutes, suggested that's mostly was emotional. So as analysis said, and actually I generally agree with this, that the major driving factor for the gold still stands on the market, and they haven't disappeared. As long as market will have zero interest rates and more money will be flow on the markets as the supportive measures for economies, it's all the best for the gold. Besides, as well, you could see from our fundamental report here is interesting subject appears that the inflationary expectations are rising. It's not very fast, but gradually the 5-year forward rate is rising and now stands around 1.7%. And it has started rising right from the drop after the major pandemic moment in March. And whether Fed would like or not, but it has to deal with this. So what I would like to say is that reaction that we saw this week, as many analysts tell, this was emotional because markets expected a bit more dovish tone from the Fed, but it hasn't got it. And it's no new announcement of the new supportive measures was sounding. It's nothing of that sort. And that has led to some disappointment. But as this was an emotional reaction, it means that it could be very short term. As a result, today, on the daily chart and from the perspective of the few weeks, we consider different scenarios compared to what we talked about previously. So if you probably remember this ABCD pattern that we discussed, and we said that, well, maybe market indeed could start the retracement right now with the OP target around 18, even as agrees with the 1825, 1840 conference support as you consider the chart. But at the same time, based on the reaction on the market on Friday, on Thursday, based on the new CFTC report that we've got, it seems that market could first show minor upward continuation. Minor is, of course, relatively minor. If we would suggest action to the 2160, well, it's approximately $200 per contract. It can't be called totally minor, but in the scale of the monthly chart, it could be minor. So, and first it could be reaction to the 2160 approximately, and before the major retracement will start. So let's start step by step by the different factors. Let's start from the technical. Technically, you can see reaction of the market on Friday, whereas actually Forex market has shown significant plunge, especially on the cable. As you can see, it was just outstanding drop. We discussed yesterday in our Forex report. But gold, despite supportive data on the United States dollar, hasn't shown any significant drop. It holds flat on the support. Based on recent CFTC report that has been published on Friday as well, you could see that overall speculative position hasn't changed significantly. So yes, some more close, some short positions, but you will see that hedgers have increased drastically positions for the 33,000 contracts, as long as shorts. What does it mean? It means that the hedgers increase the hedge and expect strong breakout in one or other direction. It means that the current price action they treat as the consolidation and suggest that should be fast action, fast breakout, either to the upside or to the downside, because hedgers increase both positions as longs and shorts. So some volatility expected, and it means that we're standing not just in a BCD pattern. In this case, hedgers would increase the longs mostly, but they also treat this as a possible consolidation, as I draw here as a triangle. Finally, why it's possible another spike up before the major retracement will start? Because on the weekly chart, you'll see in the weekly report, we have uncompleted large butterfly target as the top around 2160. This target has not been reached yet. And this reaction, mostly from the technical point of view, has been triggered by the overbought condition, as on the monthly as on the weekly chart. That's why market could try to hit this target before the major pullback will start. Because in general, the major COP on the monthly, when it also accompanied by the monthly and weekly overbought, it deserved deep retracement. So because $100 is too small reaction on the combination of this resistance, combination of the factors that we have, technical factors. All this stuff makes me think that, well, we really could get another significant upward action first, before the major retracement will start. And now we have not the retracement in progress, but the consolidation before the final spike up. I'm not sure that definitely will happen, and well, here we have approximately equal probabilities for both scenarios, but the price action that I see in recent few sessions in the previous week makes me think that's really possible. Speaking on a fundamental event, you know that the next week it will be a meeting in Wyoming where the Jerome Powell will talk about the fiscal policy of the Fed, and we should be focused on any speech about the inflation. Because as long as rates will be at 0 point and inflation starts to rise, it's just perfect combination for the gold market. That's what we need to keep an eye on. So on the intraday charts, you just could see some details of this price action. You can see that when the Forex market was dropping, gold stands flat and shows the support, good reaction on the support, 1921, it's drop and return it back up. On the hourly chart, you can see that minor hand and shoulders pattern is forming around, accompanied by the divergence. That is good sign for our theory of the possible reversal and upward continuation. So what does it mean? It means that if you already have the shorts right from this area, you need to tighten your stops to lock profit or even at least to move stop to the break even. In the current circumstances, I do not want to consider taking on new short positions. Despite that, we have the COP target that we have discussed. The Friday reaction, well, absolutely doesn't encourage me to consider new short positions. Instead, I would consider maybe taking a long position against these lows, but we need to see what will happen with this hand shoulders patch. It should be confirmed. Correspondingly, or conversely, the drop below this level, breaking the 618 support, reset the status quo, and we return back on the road to this ABCD patient. So market will confirm just it stands on the way to the downside. So as you can see in the short term, in the next session on Monday, we need to consider this level as it will be vital point, and let's see what will happen in price action.